It's had a massive rally through February, hasn't it? Massive rally through February here. So whatever the gamma's doing, whatever the delta's doing, has to be reflected in what they're pricing up the volatilities at. Otherwise, well, what are we doing, right? So you would imagine in this kind of move here that the price of volatility would be collapsing, because obviously anybody that maybe short sold up here, any put options that get sold in that area there, you know, they've obviously had to short sell the stock during that period. But if they short sold the stock during that period and they were really, really slipping this, you know, we would imagine that the price of volatilities during that period there would be going down in terms of positive correlations to equities, right? So the price of vols would be going technically a lot higher. Was the price of vol technically going a lot higher? Well, we can see that the price of vols look about fair, don't they? They look about fair. But you can see when the unfairness actually started in the first place. The unfairness on the price of volatility started on this little spinner candle right there, didn't it? And the unfairness continued on this retest here from the next day on January the 25th. But this looks kind of fair. But you tell me on the right-hand side whether you think it's fair or not. Tell me on the right-hand side whether you think this is fair. Still fair? Still fair, yes or no? Yep, still fair. Tell me where you think this is fair. Here. It's totally bull crap, isn't it? So in other words, that is total bull crap. The price of volatility has rocketed on that rally. Absolutely rocketed on the rally, hasn't it? So with the price of volatility rocking on that rally, this is a massive short coming in. So why is there a massive, why did volatility increase in that spike? Well, perhaps these guys paid attention to what the inflation break-evens were doing, maybe. Do you think that could even be a thing? That these guys paid attention to the inflation break-evens? Do you think these guys were looking at the inflation going up and seeing the buyers coming into this inflation break-evens on the 12th of February and started to recognize that they thought for a second here, this cannot be right? So these guys are pricing a massive spike in volatilities and they think it's going to be bad because they know where inflation is. Ahead of the CPI print, they know where inflation is. It's up here. This is real. And this is the idea here, that they've taken the price down. It's been easy to sell it, difficult to buy it. And that's the trade right there. That's the trade. That was the trade. That was the trade, wasn't it? By a country mile, that was a trade. So this is known to these guys. This is one of the main things they're pricing up volatilities for, is these black swan type events. So obviously, when you see the price of volatilities exploding like this, you're saying, well, wait a second, guys. Wait a second, guys. This is ridiculous. And there you go. There's your trade. So when you see these bigger pictures, these bigger hourly chart pictures here, that sell, for example, that came in there, the buy reversal that came in here, and then the sell that came in at the top edge up here, working that short sell. Guys, I mean, just that trade, just that single little trade on a one lot. How much did you make on a one lot if you took it? 500 NASDAQ points. Do you know how much 500 NASDAQ points is worth on a one lot? $10,000 in 1 day per contract. 10 grand in 1 day per contract, based on the inflation break-evens rocking to the upside, the price of volatility is rocking to the upside, and you getting a top line divergent price opportunity off 18,100, and it's trading 17,600 this morning for a 500 point move for $10,000 per contract. Little 5 lot in that, guys, 50 grand. One day. Just one day, $50,000. It's not a bad way to make a living, boss. It's not a bad way to make a living.